Welcome, guys, as you're coming on. Welcome, guys. I'm gonna start. No, so you ain't seen me for a couple of days. I've been pretty busy. So I haven't been able to do the lives like I would like to. But welcome anyway. I'll give a few minutes to let everybody know I'm on. Let's see what's going on. We'll see what's happening. Yeah. It's been a pretty interesting week of stuff going on. You know, it's the best thing I can say. It's been pretty interesting this week. Very interesting this week. So I definitely wanted to give you guys a quick update on what I'm looking at. But yeah, pretty much a very strong week of price action. I just want to see what the market has to offer, especially on Euro CAD and Pound CAD and stuff. See what's going on with those because they pulled back quite a bit. But welcome on board, guys, again. Welcome on board, guys, as you're coming on. I'm going to start in a minute, like maybe, yeah, I start at like 2:36 maybe, but I just want to give everyone a chance to get on, make sure, because I'm noticing I think it takes a little while for the live feed to show up for everyone. So I'm going to give it a little bit of a chance for everyone to get in. So welcome, guys, as you're coming in. Let me just get everybody on. Let me see what's going on. All right, see a couple thumbs up, so I guess you guys are on. All right, so yeah, starting, yeah, literally 1 more minute. We're gonna get things going there. Don't mind my computer, I'm just uploading something quickly. But yeah, so it's been a little bit of an interesting journey with the dollar index, which I'll start with first, of course, for our analysis. But it's been a very interesting couple of weeks here, man. I like the price action. I haven't been trading as much. And there's some weeks where I may not place any trades whatsoever. And that's a part of being a disciplined person. When there's opportunity, my alarms are going off every day. But when there's nothing going on, I'm not going to get myself, involved in that. So I always try to go with the market and go with what the market is doing, So, yeah. But let's get started anyway, guys. So I'm going to start off with the dollar index. Let's take a quick look at what's happened so far. So at the moment here, and what I'll do is let me just have a fresh dollar chart. Can we get one? All right, let me make a fresh dollar chart. So Control V to get rid of all of this, delete that. Let's see what we got. So, I mean, guys, when it comes to the price action here with the dollar index, so far, the price has pulled back to an area that I'm still holding on to that we could potentially have a long from. Now, the range in terms of the inflation range from the beginning of, when inflation started to take hold on the dollar and the rest of the world economy. Right now, we're in the discount range of this movement. We're in this very special order block here, which is a supply order block here. And the price is staying within this area. Now, we still have a whole month. We have, according to the calendar, we have 12 days left. Okay. To be specific, I believe the 31st is a trading day. I'm not too sure. Yeah, the 31st is the Monday. So we have one more week and then another week after, but Monday of that week to know whether we're going to close in or outside of this area. Now, if we close outside of this order block, then we should be actually looking for the dollar to continue weakening for the next couple of months. If not, then we are about to strike for a very strong long. Now, this order block here on a monthly time frame, if you look at the anatomy of price action, all right, I went through it last time with you, but I'm very happy to go through it with you guys again. Over here, let's look at the structures of, trend structure here. So we had these lower highs form, right? As the price went into the supply zone first time, second time, we have this lockdown spike, but the body of the candle didn't close above this order block. So the price still used it for supply. Then over here in 2022, we had a break above. We had this return here. Price went up for a long. No reversal signature here, no induction of the highs, but we've had a pullback. And now we've come back to the other side of this area. Now, I know that the price is at the below the major, midpoint of this order block, but it doesn't necessarily mean the price is going to break beneath. This is one thing about time and price. At the moment, we still have these 12 days left, calendar days left, until we'll know what the price is trying to do. In fact, it's 13, because we'll have to wait till August the 1st or the Tuesday. When that does happen, then we'll know, okay, if the price closes beneath here, it's pretty simple. The price will be looking for the next area of demand, which is not for a long time in this trend. We're looking at probably 94, 93 even. And even if the price decides to come back to the 90 mark, which would be like a full move down here, this is one option here. But this is dependent on the fact that the price breaks here. So if I write this here, let's just put a little bit of an if here, a little bit of programming. So if, okay, we have a monthly close beneath supply, or I'll say flip zone. I'll just call it FZ for short to save space. But in reality, what we need is that if the price closes beneath this area here, this supply flip zone, I don't really like the color red for this, because it's like let's just use the blue. So if I do this here and I draw this across here, right? Ideally, if the price is going to stay inside of this flip zone here, we need it to do it within these next 12 days. So I'm going to put supply flip zone. And this is a key zone because of the historical gravity of what the price has done. So during the lockdown period, this was the supply order block that pushed the price down for this lockdown period until we got here. So reality is that this order block here, if it is closed beneath, it does represent a new chapter in the price. Okay, so we still have 2 weeks basically to wait until we have the final verdict. But if the price does get here, then I expect it to come to this demand order block, which is where the origination of this movement happened from. Okay, that would be one aspect, or somewhere nearby. All right, but I'm not even going to try to do the nitty-gritty of somewhere nearby. I'm just going to stick to this being the maximum point that the price can get to. Now, the other option is that if price stays within this area, then we could actually continue for a long from here until the next targets. Because for me personally, I think inflation has calmed down, but it's not done yet. I think inflation is still looming around the corner. And even though, by clever manipulations of interest rates, it has kind of slowed things down, it hasn't completely stopped the situation at all. Because we still have the Ukraine and Russia war going on, which is a big issue of supply chain. There's still backed up situations from COVID that are still going on that nobody's really talking about, but they still exist. And it's not like the cost of living is really calmed down just as of yet. The cost of goods and services are still pretty high and probably are going to stay high for a while. So I think this is just kind of like a calming wave in inflation, but I don't think it's dealing with the problem. All right. So with that being said, anyway, okay, now that the price action is here, we have a wait. Well, we're gonna have to wait and see what the price does here. Now, if for me, taking in lessons from the market, for example, what we had with COVID, if you're looking at this candle here during March, I remember the price was very much so far above this order block. Okay, but you can see that by the time it got to the end of the month, the price has snapped all the way back down and actually ended up even beneath this supply order block here. Now, why am I saying this? Well, in the next 2 weeks, we may even see the price pull all the way back down over to these lows right here. But all I will say to you is that when it comes to time, until we get to August the 1st, don't assume that the price has closed beneath this order block just yet. Because of course, if it's down here somewhere, I know that it would be very easy for all of us, and I do it myself in my mind that, okay, this is definitely going to close beneath, let's continue. But taking lessons from COVID-19 price action and around that time, and just, even if we ignore COVID, let's just go, for example, over here. I'll just use this area as an example and picking any random one. You know, if you looked at these candles for the, you know, we're talking about the monthly here. We have 1, 2, 3 candles where we have strong wick closes outside of this range. And if you were trying to capture the bottom of this bearish movement for the price to pull back, you would have had 3 months where the price would have caught you out, because every time the price closes strongly above here, this is pretty far. You know, this is almost 200 pips, so it's not a small movement. Every single month, you would have thought the price is, yeah, it's going to break above, let's go for a buy. And you'd been sadly disappointed, because you can see here, the bodies of the candle still respected this supply order block and closed within this area, okay? So I'm saying that to say that from history and looking at price action, body and wick closures are an important aspect of how we read price from what we have. If you don't have level 2 data, if you don't have market order flow data for you to look at order flow on Forex, which is very rare to find, okay, most likely is actually, yeah, it will be a situation where you're going to have to use the candlesticks to interpret that to the best of your ability. So having that in mind, what that means is, until this candle closes on August the 1st, we can't make any prompt decisions about what to do. You're going to have to wait until the market gets here to move price, or to wait for price to do what it needs to do, okay? So this is why I would say to you that please be aware of this. Until we get that 1st of August movement, we can't take any decisions, right? Now, since we based on that dollar index price action here, now for me, I'm not saying that I want to do nitty gritty, because we could do nitty gritty, because right now we have a few scenarios. Now, I'll show you some setups if the price actually stays within this area. I'll show you one of them, which is on the weekly. Now, on the weekly time frame, we have a liquidity gap here. We have equal highs here, which lets me know that there is going to be a time the price will definitely come back up here. I know it fundamentally, and I also know it technically too. There is a liquidity gap here, so there is room for the price to actually come down here. And there's also equal lows down here. Okay, so in a situation like this, there's a strong chance the price could actually do both things, or go down here and then go back long. It depends. Now, what I was actually looking for this week is that we have a weekly order block just beneath this monthly zone that the price hasn't got into just yet, right? So my thing is that if the price was to take the low of the previous week, and then after get into this area, we may actually have this pullback here. Now, if the price has a pullback here, my first immediate target will be these equal highs now, or relative equal highs. Now, when we spoke about this last time, when the price broke down here and did scenario 1, if you remember that, there was 2 scenarios. Either the price was going to break straight down, or we were going to have a pullback to fill this liquidity void here, which if I put more detail on, we had a H4 break here. So I'm going to put this out here. We have a H4 demand zone, which was the key area of demand for price. We had this strong break. The price was very unforgiving, no return back, left the liquidity gap here at a H4 validation point. It really didn't give us a chance for any comeback. So we have at least the price to come back to 102 and maybe even take these highs. That was originally what we wanted when the price got beneath this low, but strong close and just a continuation that week. No problem whatsoever. Now, because of that kind of price action here, there is room where there is definitely liquidity voids all over the place on the upside. Now, this is my thing. One way that we may be able to know what the price is going to do before it gets to the 31st is with this price taking the low of the previous week. If the price manages to pull back pretty strongly. Now, if you see my markings, the accuracy of every single area is important to look at. On the H4, for example, if you want to know if you've drawn your Fibonacci correctly, look at this supply order block. It lands exactly on the equilibrium point to the pip. This is an equilibrium order block, as I call it within the academy here. And the price has made one so perfectly over here. So if the price was to close above equilibrium and actually close this gap here without returning to this, and please pay attention to what I'm saying, if the price does this long right now without returning to this weekly order block here, I'll be suspicious if the price pushes along here, because at that point, beneath these lows will be an unfulfilled efficiency. There will be inefficiency here. So that means once the price closes down on this area, then it'll be looking to get back for a short. Now, if the price actually dips into this liquidity pool here first and then goes for a long, then that might be a good sign for us to know that we could actually have a close back above this area before we get to the 1st of August. Okay. And so based on that, this is what I'm watching at the moment. The reason why there isn't that much liquidity behind this move is because, yes, the price has taken the low, which is a normal reversal pattern. But if we measure with order block theory, the price actually hasn't got that much liquidity behind it to push for a long. And there isn't that much interest. I know there is a liquidity void right over here. We have one swing high right here that the market's left. And that's really about it. The rest is just kind of like a wilderness of bearish movement where there's nothing really going on apart from red candles. So my thing is that we may not see a major move on the dollar this week, which is why I'm going to share kind of like what my strategy is when this happens. But I would say from the dollar index, this is what I'll be looking for. If the price dips into this weekly area here, gives us a nice weekly reaction and comes to these equal highs, let's say before the 1st of August, then we could actually say, well, we may actually have the continuation long situation happening. Okay. Now I know there's a gap here and there's also lows here, and I'm not being biased, but there's many times in the market when there's an overall direction that market makers are trying to achieve, or fundamental analysis, the powers that be are trying to achieve, they may, especially depending on time frame as well, they may decide to omit or ignore certain order blocks or fill out certain inefficiencies for a while and leave it alone until further notice. Now, the example I always give for this to kind of give evidence to what I'm saying is, I'll show you over here, is if I go over to Euro USD and I go over to the monthly, okay, or weekly, maybe, let's use that instead. And we just take a look at this. So on the weekly here, we have an order block, of course, right here, just before this gap is formed. Now, the gap I'm talking about, I'm just going to put an X sign here. We have a liquidity gap left. Now, the reason why the price gapped up, if you don't know the history, is that President Macron gave a speech that caused the euro to shoot through the roof. And the price never came back to fill this gap. The price launched off from this order block here. This is the last demand order block the price launched off from. The market gapped up. We had a stop hunt again and just continued to go long from 2017 until 2018. All right. It actually took the market 3 years, and specifically another high fundamental moment in history, which is COVID-19 here, to actually fill out this gap right here to the pip. If you look at what the price did, and let's just map this range here, you can see between these pink lines, which represent the demand range, the price wicked down perfectly into this same demand order block where the first movement happened. And you can see we had this push down here for another long. However, because the euro at the moment compared to the dollar is bearish, we had this lower high formation happen here, which is why the price pushed down further short. So even though price is back above here going for a long, for example, on Euro USD, I do expect the price to continue going short sooner or later, which is why I'm saying that I do think that the dollar has had a little bit of a sell-off, but inflation is not done yet. I'm sure that there is definitely a second wave coming before the year is out, at least. Now, with that being said, this liquidity gap is a monthly, weekly time frame liquidity gap. It looks pretty small, but it's actually now on my, this is 38 pips. On my IC markets is a bit bigger, so I think 48 or 50 pips. Now, if you were to take it from the close of this candle to the open of the next candle, which is really how we should ascertain the gap, this is almost 100 pips of a liquidity gap. So this is a very large liquidity gap, and something like that should be filled, but wasn't filled for 3 years. So why am I saying this? There was a purposeful fundamental price point range that Euro USD's market manipulators wanted to get to, which was up to these highs right here. To achieve this, they continued pushing the price and decided to ignore or to omit filling up this gap. Now, the lower the time frame, the less likely this is to happen. If we had a 1 minute liquidity gap, okay, like we have many times over, you know, the price will find a way to fill it at some point. So if we just say, for example, here on the 1 minute, we had a liquidity gap right here. You guys can see it, right? Price pushes down, and then we just get this random moment before the price drops massively, as you can see here. If I go from the point that the gap is filled, you can see we have 767 pips quite rapidly. But beforehand, price is going well. It's already going short right direction. And seemingly randomly, the price just seems to come back up to this area here. Not just fill this gap, there's also another one literally over here. The price came back to kind of fill out these two gaps, clear that inefficiency. We're dealing with the 1 minute right now, and then you can see the price heads off for a short and doesn't stop going, right? So the lower the time frame, the faster it is and more likely a liquidity gap will be filled out. So why am I saying this? So we come back to the dollar index again and we take a look at where we are. And I'm just going to bring out all of my dollar index channel charts to the right. Let me see if I can do this. I'm going to delete a few charts because we don't need those right now. Take that out. Yeah, take this all out. But if we look again at where we are with the dollar index, bring this here. We can go back to the H4. Or let's just stay on the weekly here. You can see it from here. We have equal lows and we have a liquidity gap. Now, because inflation is still high, despite the figures, having a slight relief, the market, especially because this is a weekly inefficiency, so a higher time inefficiency, I know that one day the dollar is going to suffer a catastrophic death. So this gap here will be filled out from a fundamental perspective. It's like a fundamental prophecy that's going to happen. But the market may, for the meantime, whilst inflation is the major overarching principle or thing that we're looking at in the economy, leave this gap alone and decide to go for a long without it. Okay. So that's one of the ways that we may actually see the price do this. So that's why I'm looking at this order block here, because the price may decide to give us a trigger here, induction long, and that would be it. And we could actually see the price continuing to go long. All right. But again, of course, August 1st will be an important day. But these are some of the ways that we can figure out what the market is doing beforehand. Okay. Now, if the price decides to take off without using this weekly order block, then wherever the price ends off at is really just a pullback for it to continue going short. Okay. So at that point, then we could say, okay, maybe the price may actually come down and fill this before going for a long. All right. But we'll have to wait and see. Now, because there's this kind of situation with the dollar right now, and there's not been much movement this week, really, this is why I've switched my analysis to looking at cross pairs. So what you want to do, and this is what I do personally, when we're in a market where price action is not really conducive for dollar index action, we have correlation offshoots going on. What I mean by correlation offshoots, now usually if the dollar gains strength, Euro USD, AUD USD, NZ USD, Pound USD should be going short, whilst things like USD JPY, USD CHF, USD CAD should in general be going long. USD CAD may vary, but in reality, at least USD CHF for sure should be going for a long. Okay, because the dollar is the overarching or controlling factor here. Right now, if we were to look at these different pairs, they look completely different, which means that the dollar right now, the weakening that it's had from the massive drop has kind of taken off that correlation effect that it usually has. If I go to AUD USD right now, and we look at the H4 for each of these, so the beginning of each week. So starting off with Euro USD again, Euro USD hasn't hardly moved this week. All right, this week is actually, now, I guess in comparison, this is relatively hasn't moved, but compared to AUD USD, which so far this week has dropped down around about the same amount of pips, but in a different complete shape. This is what I'm talking about in terms of price action structure. It's completely different. All right, USD JPY. Let's push along. And I'm actually looking for a possible trade on this for a long, potentially. But looking at USD JPY, it's actually done 200 and something pips so far for a long. NZD USD looks similar to AUD USD, but not to Euro USD at all. And even on the daily time frame, H1, you can see that things are completely different. Now, I know there's news involved with that. Now, if you look at Pound USD has probably done the most pips short out of all of the XUSD pairs. It's done 200 pips short so far. And it's come to a key little area right here so far, which is pretty nice. Now, the helper for this kind of short was the pound news we had. We had a lower reading or reading on the tape for the inflationary news, CPI news. Because the numbers are lower, it's caused the pound to become weaker, which I always tell you that when the consumers are doing better, the economy does worse, in the sense that when consumers pay less for the same goods and services, the producers, and investors see this as a negative thing. That's why it really is actually positive for us, because it means cost of living drops a little bit, which is helpful for everyone. But in reality, this is the situation. So Pound USD has done a few pips. So right now, the fundamentals of these individual base currency pairs are playing an effect on currencies. And it seems out of the list right now, the euro seems to be holding up the strongest, which means the euro out right now has the strongest strength out of these pairs, just from iService. All right. USD CHF, on the other hand, has taken a weekly low, similar to Euro USD, nothing at all really happened. And the USD CAD really having a time of its own, doing whatever it's doing. Okay, so the correlation is be off. When this happened, I won't really trade dollar pairs. This is where I'll look for crosses. Now, my cross pairs I like to look at. The next kind of, if you were to go in the list of order, what I look next at would be either Japanese yen pairs, like pound Japanese yen, for example, CAD JPY, Euro JPY, things like that. Or I'll look at CAD pairs. So the CAD pairs have been pretty interesting so far. I'll start with pound CAD, which has been pretty interesting already. Now with pound CAD right now, pound CAD has entered into a very important supply order block, which is a supply order block that kicked off the short for 2022. The price has come back in here, and obviously this is a strong area of supply. The price hasn't actually done any induction for it to go for a short, it's just sold off short. Even on the daily time frame here, if I zoom in, we have equal highs basically, or relative equal highs right here. Now the first high is 294, 173.294. The second is 173.291. So 3 micro pips between it. So a third of a pip. So equal highs basically. And from that already, the price has given us a very strong short. Now this pullback, I don't know how long it's going to last for. I have an idea of what the price may do with this, but for me, my key thing I'm looking at the moment is how the price behaves here. Now we have the high of the previous month that the price has kind of bounced back on. And we have the last major high, I would say, induction to go for along over here. Now, on the H4, which is something that I was filling my students in just a moment ago, over here, like we've had, and let's go over here. If I go over to the H4 here right now, let's drag this on. We have a very strong H4 supply order block that the price has broken above and used it as demand. Only problem is though, is that this major movement we had last week is an inefficient move, because if I just draw a line right across here, I won't actually put it at the low, just nearby. You can see that the price actually didn't return into this order block here, other side, before going for a long. And so now that that's happened, my thing is that I'm actually watching pound CAD, because we may end up having a situation where the price may take this weekly low and actually spring back up here to take up all these highs that have been left behind. Because we've had no weekly induction, so we have no interaction between weekly highs, this week's high and the last week. Neither do we have any interaction between daily highs. And now, in fact, we're dealing with a very strong liquidity void. So this may end up being a very nice pullback here, and we could get a long going up here and with targets above this high as the first, or even further targets for a long. Now, I'm waiting to see what's going to happen. With the speed at which the price is already pushed down now, I want to see how the price interacts with the low. If the H4 candle closes beneath here, then we have an even greater opportunity to get even further pullbacks. But for now, I'm waiting to see what the market is going to do. But this is a setup that I have that I'm pretty interested in, and is one of my setups here that I'm looking at. Now, EuroCAD is slightly different, and clearly, again, you can see the euro is shining in strength because compared to the pound, EuroCAD is moving in the same direction as pound CAD, so there is correlation, but it's done less than half the amount of pips in a drop that pound CAD has done. Pound CAD has done 370 or so. And let's just verify this here. If I take the top of the move of this week till now, okay, so pound CAD has done 300 and let's just call it 365 pips, 366 pips, okay, since the start of the week. Whereas with EuroCAD, if I take the top to the bottom, we probably have about 100 plus, okay, so 125 pips. So less than half, so 3 times less amount almost in terms of pip movement, which shows that there is a lot of strength on the euro right now. Okay. Now, this movement here, it'll be interesting to see where it goes. Now, for me, EuroCAD still annoyed me because this order block is still inefficient. Now, I'd be very shocked if the price came all the way back down here and then went for a long. It would be a sight to see if that happens. I don't really believe that would happen. I think the price has gone a bit too far away for that. But if you remember our analysis from the monthly, which I still have here for EuroCAD, the aim I have for EuroCAD, and as I told you on IC markets, we have a liquidity gap between these two lines at 125 around this range that hasn't been filled since 2012. I'm still bearish on the EuroCAD for a little while, but the price does need to take these relative and equal monthly highs and return to this supply zone, which is the next leg down in terms of Fibonacci movement 2 at 62. We've had the OTE spike right here and the nearby OTE movements here. Now the next level to get to is over here to fill this liquidity void and also take these highs. Now the order block that the price is working with, I've spoken to you about already in detail, which is this supply order block here, is a flip zone. So price broke above, return to the other side. So now I'm looking for a long. Okay, so I do believe EuroCAD is actually going to go long. So this pullback right now, how I'm seeing it is just as an opportunity to find another long position. It just depends on what type of pullback and how long it's going to go for. Okay, so having all of that information in mind, I'll take this off for now. I want to really see what the price is going to do. Now, obviously, because the price has gone to a very clean and strong area of weekly supply and also done this movement, and we have a liquidity void, we might actually get further down movements, you know, from the price. But we'll have to see, you know, what the market is going to do for us to kind of make any decision here. So for now, I'm still an observer. I'm not taking any trades as of yet. You know, one of the last major breaks that we had was here. Maybe EuroCAD might find its way all the way back down here. It just does depend on what's going on. But we'll have to see. You know, but these are my two pairs so far that I've looked at that I can say I really do like, okay, as an alternative. Another couple of pairs that I'm looking at, this is in the JPY section now, is I do like the way CAD CHF looks now. The only problem is, of course, I know that if pound CAD is going to go for a long, CAD CHF, or in usual terms or usual moments like that, if pound CAD goes long, CAD JPY should be going short. However, as you can see, there is off correlation on pairs, so it's really going to be based on technical analysis as well. We've had a very strong induction here, and we've broken many areas of market structure all the way up to the most. This is the highest swing high that the price has closed above here on USD JPY, so pretty clean. So if we did have a pullback, and this is my other setup I have for CAD Japanese yen. If I was to draw this out and lay this over here, if CAD Japanese yen ever wanted to give us an opportunity to get in, we could actually go for a long. And my targets are a lot higher, but like I was telling the academy students today, we have obvious liquidity voids and gaps that need to be filled out. We have a liquidity void here, or unfulfilled efficiency to be more correct, right up here at 108. Just above that, though, the high of the day is equal highs in this small little gap. It might be a little bit difficult to see, but if I zoom in twice and just come back a little bit here, you see that here, there's a slight gap at market open. Very, very tiny, but there's still a slight gap from market close to open here. Even though the wick comes here, the wick doesn't come back to the close. So there's a little gap between this range from here to here. It's 2 pips, but it still is a gap. And it's a new day gap, which is interesting. That still hasn't been filled till now. So there's opportunity for the price to go for some opportunity for a long, but we need an RTO for that to happen. Okay. At the moment, the price is still heading down and breaking structure here, so that's pretty cool. But I won't touch anything yet because I want to let the price, the market come to us. Okay, so these are my layouts that I have going on, you know, for the meantime. All right, so let's see what else is going on. CAD CHF, let's template this out. Let's go for standard here. Let's go over to AUD JPY, AUD CAD. Yeah, I mean, pretty much there's a whole load of things going on that I'm intrigued to see how the price is gonna, you know, lay out what is going to lay out. I just want to see what the market is going to do. So these really are my setups. Now, before I go, I know that there's a lot of talk about gold right now, so I want to jump into the discussion a little bit. So I am. Now with gold, as I previously told you guys, that even though I do know that the price wants to go short, we have an obvious liquidity gap on gold. You know, so even if you're someone who is for gold to go long in the long term, which I believe too, if we look at this trend for gold, it's just a sign of how bad our financial system is in terms of fiat currency. Gold has increased in leaps and bounds since 2001. Okay, it's almost 10 times more expensive, at least 9 times more expensive at its highest price than 2001. So in 22 years, it's increased in value by 10 times, 9 to 10, close to 10 times at least. Shows you how bad monetary value has gone down by in just a 20-year period. So money printer is not good. But anyway, with this being said, gold definitely has a short in it that needs to happen. And there is even a liquidity void and gap as little as here. Now, I do think the market is going to use this dollar strengthening. That's still going to happen as a moment of time to be able to pull prices back really badly, or in terms of asset prices, okay? Now, remember, if asset prices drop, okay, because of the dollar strength, this is a way to discourage people from holding onto assets and in fact holding onto fiat currency because they're not going to get value, especially for gold. If you're a gold investor and you invest in gold bars, especially, the 40% bullion tax puts you at, if you want to put it at 40% spread, it's kind of like, in essence, if you were to make any profit from gold, you have to wait from whatever price you buy your bar of gold for you to be in profit. You're going to have to wait for gold to do 40% more than what the price is currently already. So as soon as you buy a gold bar, you're already 40% down. If you buy a gold coin, it's a little bit different because you can't tax, because gold coins, gold money, silver coins are classed as money. You can't tax money. So you might be able to get away with that if you're holding up your coins. But really, if you want to invest serious money in gold, you'll probably want to be best off buying gold bars. Otherwise, your house will look like, or your vault will look like, you know, one of those Pirates of the Caribbean movies with just lots of coins everywhere, which is not wrong. I mean, if you want to avoid tax, then why not? Who says you shouldn't? But anyway, with that being said, I know that gold is going to have a super short very soon when the dollar, but it will hinge on the dollar gaining massive strength again. In the meantime, we have a liquidity gap here that I always knew the price would want to fill at the downside, but we also have a weekly validation point. You guys will call it FVG if you're an ICT person, which means that we have a fair value gap or a gap in price with a liquidity void reaching up to this next supply zone. Yeah. So for me, when I look at the price action now, Hugo's Way price feed for gold isn't the greatest. So what I might actually do is probably switch this over to let me switch this over to IC markets for a minute, and I'll show you the price feed on here because I've already done this analysis with my academy students, so I can show you the flow of liquidity. Right now, if we go over here and look at the daily time frame, right, this is the high point that we had, this massive spike here on gold. Now, there's a very important difference on Hugo's Way compared to IC markets. On IC markets, the tape reads that we actually have taken the high of the year of 2022 in this year, All right. And we've not only just that, but we've also had the high. If I drag this a bit further on, the high of 2020, which was left behind here, has also been taken in this move. Hence why the price was able to do this movement. So if you ever wondered why you woke up at 10 o'clock or you saw the market at 10 o'clock and it just randomly spiked as soon as the new day started and took all these highs before eventually descending short, this is exactly why. Because they were always aiming to go for those highs. Now, that's a very big difference in price free from Hugo's way, which Hugo's way, if I switch one more time here, Hugo's way suggests that this high right here hasn't been taken yet. And that's a very, very big difference. It's almost a 50, 100, it was a 15 pip difference here, which is really dangerous. Okay, now IC Markets is a much larger broker and has trillions of dollars of volume going through the, I think last time I saw it was like about 3 trillion in terms of orders going through their platform. So it'll be a little bit better. It's easier to believe, you know, gold's price feed on IC Markets. Now we can always go for a second opinion on another chart, and finding a reputable broker, something like IG or FX CM or something would be good. Now, even just on my funded account broker, for example, if I go to funded account broker here, and I switch over here, if I was to put a line at this same spot, okay, same place, we have a very matching price feed situation to exactly the same as IC Market. So against the 3 brokers I have opened, 2 out of 3 are saying that this high right here has taken the high of 2022 and 2020. So I'm going to stick with that analysis. And this is why it's key, because this kind of movement here is one of the triggers that makes the price, or will give the price that strong reversal. And the fact of how it happened here, and when I say how it happened, before I continue this analysis, if I go to the H1, I'll explain what I mean. If I just pull back a little bit here for you to see how it actually happened. This wasn't a move that happened with news. As soon as the market opened for the new day, gold spiked here. So it did 373 pips within a minute and within the first hour of the day. The only people that are able to do those kind of things are going to be people who are trading gold as in market makers. So this was a market manipulation move at its finest. Okay, and this movement here was pre-planned for sure. There's too much evidence to suggest this movement was pre-planned because of the timing of when it happened. Okay, now coming back to gold here, why am I still looking for the long? Well, if we trace order flow here, which is going to be a lot easier to do on IC Markets here before I go. We have this first supply zone here. So this is the first move. The price drops down here. It spikes into this area and we form a new supply zone. So if we're tracing the flow of liquidity here, this is first supply, this is the second supply derived from the first. We get the price moving further down. We have another supply zone derived from this return in here. So if we're just following, and I'll put this order block properly so you can see it. Right now, the most recent order block or the most concentrated area of selling liquidity is at this 2000 range. So just above this validation point or FVG and fair value gap 2, right? And liquidity void. So I'm expecting gold to take this high right here, which is basically at equal highs with, or just about taking the high of the previous month, and continue going further, which is about 361 pips, which for gold, it can actually do that in a day. So I'm expecting to see gold actually give us a little bit more of a long here. And I mean, the way these highs are formed, maybe even come a bit higher and take these highs too and come to about 2021, 2023 price range here. But at least I'm expecting the price to get into this order block. I don't believe the price is just going to touch out this magical spot here, weekly validation point in this reverse. There might be a reaction here, but most likely price will push up a little bit higher here first, at least. And then we should see a reaction in here. Once the price gets in here, this is where I'll be looking for personally a sell and not a buy, because even though the price does look like it's primed to buy from the higher time frame perspective this way, we have an obvious liquidity gap that hasn't been filled, and also these lows here at 1600. So I do think there's a very strong incoming second wave on the dollar. I would like to definitely have a look at that and see what happens, okay, with that. All right, so this is my view on gold, guys. I think we have one more long left before the short. Now, there's a few options of how the price could give us a long, and I'm actually hoping for this to happen. All right, we've broken above many supply order blocks, but I'm just going to use, let's just use this one here. So this was a key supply order block that price used to go for a short until we got to this special demand zone that we were looking at here, right over here. Now we've had a break above. You see the price is closed above, return back in here, and then bam, stop on or induction here, as I call it, a stop on right here, and then a long. Now my hopes is that hopefully gold could give us a pullback short and actually give us a return into this area one more time before taking off for a long. If that was to be the case, that would be a pretty good move for us to take some profit off or take some enjoyment out of. So if I was to draw this out, let's look at the D1 and then the H1. Let's do a little cross section here again. So if I draw this here, all right, H4, then H1, all right, here's the reaction here. This is the induction here for a long. Now notice that the candle here is a Judas swing. We have a very strong and fast movement away from these, way below these lows to kind of run everyone stops. Price starts to take off for a long, not so strongly. We get into the new day, and then as we get into the US session where more liquidity comes in, then bam, we get this move. Now, as a result of this movement here, this whole H1 area represents an order block. Now, if you were to take an entry literally and put your stop loss here, you're going to have a stop loss of over 100 pips, which is not so good. All right. Now, if I add the Fibonacci range here to look at premium and discount pricing here, what we can look for is to see where the optimal trade level is. Now, OTE in this area here is 1955.70, which is just very close to the low of this day. So it actually, for me, would expect the price to probably take the low of this day. Now, if I go to the 30-minute version of this order block, we actually have a little bit more information we can work with. Here, we have the order block here. This is the 30-minute version of what happened. And you can see we have these two demand zones here just nested inside the price. Okay, my interest is going to be on this second one here, over here. And I'll actually use another color so that it can stand out. Let's hope that red works here or something. Okay, red is very ugly, so let's change that. Let's try this. All right, so slate blue. All right, so we've got this slate blue. I wish I could get something that could stand out a little bit better than that. Let's try, okay, let's just use this gold. I know it's ugly, guys. Don't shout at me. This is just for now. Now, at this low over here, the best setup that we could actually get for gold to give us an opportunity to get into this long as well is if it pulled back here and took the low, entered into this order block and used this second order block here, which is where most of the liquidity would be transferring to. And then from here, give us a long. That would be a great entry to get us into a long. And if that does happen, we can get a long from 1954, I guess minus the wicks, because we may get some wick action. If you know, gold being gold may wick a little bit lower than that. But if the body closes in here, even on the 30-minute, we could look for a long here that could drive the price all the way until we get to that 2007 level. Now, I know the price was going to always do this because of this H4 equal highs here, but the 2007 level, which is that order block, starts here. And if we're more specific on the H4, we can actually see, I don't know if you can see this, but my eyes are just so accustomed to seeing these things, I can't unsee it. Look at this high right here. If we look at this high right here, look at this high right here. If I go over and I was to draw a supply zone across here, let's change this back to our neutral color for supply, which is blue. So there is the supply zone right here. And this is the high. We have a small unfulfilled efficiency. Now, this is a very tiny order block. But if I just draw this here, right here, and then after I put this here, UF, okay, we have a very small unfulfilled efficiency here. Now, what I'm going to do, let me draw this up and put a line here, right? If I do that and I draw the line here, Look at where this is. This is 2015. That's what it says. If I go back over to where we are on the monthly or daily time frame, okay, that's order block is at this high of the wick. So I'm expecting gold to really enter here, probably wick somewhere around here before selling off for a short. So we could actually be a bit more accurate with this and say that we may actually get, if the price does follow through this H4 unfulfilled efficiency and a real target over here, okay, and maybe possibly a little bit higher, and then we get a short. So this is my play out with, this is my kind of my layout with gold, and this is what I'm looking for. And I'm hoping that the price can do this. So I'm actually going to set an alarm. Now, my usual thing is to just set an alarm below equilibrium so that in this case, I only like to pay attention to trade ranges where the price is getting into discount. Because if I'm paying attention to equilibrium, institutions are paying to, attention to discount price. And then now we're talking information that makes sense. So if until the price gets below equilibrium, it'll be something on my watch list, but I won't be interested in committing to any trades. Okay, and that's really the layout. I really wanted to spend a little bit more time with you guys on this one so that you can know what's going on. All right, I know it's been a while, and I'll catch up with you guys in a minute. So everyone take care and have